Hello, everybody, and thanks again for tuning in to one of Leverage Monkey's analysis. Today is July 27th, and going to go over a little bit of what's taken place. So, yesterday we went up, we hit the 100-day MA in Bitcoin. Hit the 100-day, was rejected pretty hard. Came back down into 36. So it went from all the way from 40 to 36, so about a 4,000 price collapse. So you can see that's a pretty big wick on top of that candle. Then overnight, it found support and then came back up. And the reason it found support is if you look on Trading Light, the heat map, there was buyers waiting at 35,000. 35,500. There was a good set of buyers waiting. So that's why it came down to 36. Like, I think it got to 36,750, and then that pretty much is where it stopped and made it support. So people were front running the heat map. It looked like that's why I really want to get into trading light. But so a bear market rejection on the 100-day. We're still in bear market. We're not in a bull market. In order to become in a bull market, we would have to break above the 100-day, set it as support for a little while, and then take off from there, resume up. As long as we're below it or we're touching it, even dancing on it, it's still pretty much a bear market. And this particular part here, like I keep saying, is very similar to this one. We didn't get where we popped out. We broke out of the triangle and we back tested it, and then we went and touched the top of the new triangle. We didn't get this part here. We didn't get that part here. This, for those that are new, was a short squeeze. There was a Wyckoff accumulation here that ended when it was supposed to take off. It turned into a Wyckoff redistribution. It went down. The distribution schematic finished with only about a $2,000 sell-off here. And so there was no selling. Pretty much what happened, very low volume selling, some of the lowest volume we've seen here. So that wasn't a good sign. So then FTX spot buyer bought 32K, and then the FTX perp contracts bought, and then it moved on to Durbit and all of that. And then on Sunday, when the CME opened, it was low volume because it was Sunday. The CME opened and they sent it, just like I said they were going to. Well, I didn't say they were going to, but I had a pretty good feeling. That's why I was 50% leverage, and then I added the 50% when it took off on the short squeeze. And that was quite a short squeeze, almost $1.2 billion squeezed in shorts. So that was fun to watch. I sold my last 25% of leverage up here when we touched the 100-day MA. If you guys are on Twitter, I sent out a couple tweets saying that short squeeze was over, all the easy money was had, and I'm taking my last 25% at the 100-day MA touch. And I did that when we had only touched this red line. So I do everything prior, so I'm not making stuff up with it when it already happened. But so some of the other things I want to go over is what the past looks like. So this is the RSI with the breakout. It was declining since January 8th. There's two other times that are very similar, like I said yesterday. This particular time, which was 2019, right here is where they did the Wyckoff accumulation. So pretty much right after they perpetrated something very similar to this, um, they then it went up and then it slowly grinded down and then it started its Wyckoff. So this went up and then slowly grinded down. Right now we're on the up, so we could go up here and then slowly ride the top of this line down. That is very possible, because if you go to the old all-time high of 2000, what was it, 2017, if you go over here, we're doing pretty much this right here, this part here. So we went up, touched, and this actually broke through the 100-day. Touched the 100-day MA, was rejected. It went down. This is on the daily, so it has about 4 or 5 days of decline, and then it had another attempt to get back to the 100-day. So it had about another week and a half of trying to get back up there. It made a lower high than the first time, and then that's when the selling started beginning. So we could see something similar to that. It all depends on if we can build support here and go up and try to make a higher high. That's what I'm going to be looking for. We need to go up if we're going to go and try to be bull market. We need to go up and break the 100-day, make a higher high, and we need to establish support there, and then we need to take off from there. So we would have to, we came down here, we bounced up. Now probably it's going to go a couple days here, go back up, test the 100-day, probably even get it rejected again, put some more here, go up, blast through it, bounce on top of it. So something like that. If it went up and bounced on top of it, something like that, I would like to see. And then after it bounced on top of it, it then resumes up. That's something I'd like to see for it to be convincing that this is it. This is more volume than we were getting down here, but still it's not significant volume to get this scenario, in my opinion, because this is kind of an outlier here, all that volume. Well, not all of it. Well, kind of, because if you look, the 32, from 32 all the way up here, look at what the volume came from. So the 32 volume came from a spot buyer on FTX, one buyer, one whale, and then a bunch of perp contracts on FTX that rolled into Durbit, and then all of a sudden you had the short squeeze from squeezing the shorts. None of that, except for the small spot buyer down here at 32, which we don't even know if he still has it. 100 million profit was taken on OTC yesterday at the 100-day. They sold 100 million straight over OTC, so someone made some good money. So we don't know if this 32 spot buyer still has the coins. He could have already got rid of them already up here. So this whole buying right here is just one big giant, whatever you want to call it, Ponzi scheme. A huge pump and dump. It's the pump, basically on not very confident stuff. If it was a bunch of whale buyers from like corporations buying spot, yeah, I would say this is a sustainable rally. But You got one spot whale manipulating because he saw that the volume didn't break to the downside, so he bought, and then the perp contracts, and then the short squeeze. That's what you got. And so, yeah, it was a volatile move. It was up. Bulls are getting all excited. So, if they want to, if the ultimate goal is to bring Bitcoin down and accumulate lower with the Wyckoff accumulation in these liquidity voids here and here, or down here at the old all-time high, or wherever they're going to accumulate. If that's the plan, then, like I said, up here, all of this got exhausted when we went down here, $15 billion in losses. So if they want to bring it down lower, they need more what's called overhead supply, because overhead supply got exhausted here. So they need more overhead supply. So they need to convince or trick the 45, $46 billion in stable coins right now to get back in, and so that they can get them back in, and then pull the rug. And this little pop here, I don't think is going to get all of them back in. So that's what I think is why we could hang out here a while. They're going to really want to get some people in before they go back down lower. And then also on Elliott wave is showing this as a wave, this is a B wave, and then it's showing the C wave down here somewhere at 20K. So this is quite possible in Elliott wave A, B, and C. And the C is actually showing that it could be all the way until December 21st. So this could be, like I said over here, this particular bear market here was like a year. I'm hoping that this isn't a year-long bear market, but it could be. So if it is, we made the final high or whatever in Bitcoin on April 14th. So it's already been, 3.5 months, 4.5 months. So yeah, 3.5 months. So we're 3.5 months in, and I hope it's not a year long, but if it goes all the way till December 27th is where the low is, um, that's quite a bit more time of just weakness. I don't see huge institutional buyers because of regulation and the SEC, and also the tax friendly isn't really friendly for the corporations. They can only on their balance sheet right now, from what I heard, they can only realize Bitcoin gains. Any losses they can't really use as showing as a loss on their earnings. Um, so that is not very attractive to them. They're so only one sided. Only if Bitcoin goes up can they help their balance sheets. If it goes down, they can't claim it. And so that's not attractive to them. So corporations like MicroStrategy and stuff like that, he bought in at 9K. So of course he's buying more. His cost basis is rising. He's about 25K now, but he doesn't think it's going to go below 25K. But like Tesla, they just reported yesterday, and they had a $23 billion loss on their spot Bitcoin they have now, and they couldn't really use it to help their earnings. The tax part of it and the reporting part of it needs to be changed. It's not friendly. And so I don't see the institutional adoption coming for another year to 3 years. The SEC needs to fix stuff. The IRS needs to fix stuff. Cryptocurrency is very new. There hasn't been a new asset class created since the 1600s. So you have to realize that, yeah, this has the potential of being like the internet, but it's going to take time for them to figure out how to get everything. So going to all-time highs, I don't see it. But if we were to resume bull, and this was a prolonged mid-cycle shakeout to reaccumulate here, um, this would have to break above the 100-day, establish it as support, and then go from there. But if you look at the volume map, there is a lot of volume here. Like I was saying yesterday, where I said on Twitter all the easy money had been had, and that now people are going to break into where people are going to start who didn't sell down here, who are going to start getting to break even, that are going to decide that crypto's 80 vol is too volatile for them, and they don't want to be in it anymore. They're going to start taking at break even. They're going to start getting back out because they're scared. Well, there's a huge amount of volume here. As you can see here, there was a lot of buyers, and whatever buyers didn't puke down here and take their $15+ billion in loss, they're sitting up here. Some of them are, seeing it whipsaw up and down, and they're not liking the volatility. They're thinking, should I just take my money when I break even? Stuff like that. And so maybe some of them actually bought a long time ago and they want to take profit, but they don't want to take it down here, and they don't think it's going to go back up to here, so they're waiting for here. You never know. So this particular rally, I don't see it getting much higher than this. 40 to 44K is where I think it possibly is topping out. There is a possibility, if you look, it could go up to all the way up to here, about 48, 50K. If you see that, that's when you start getting into all of this resistance. So from here to here, there's not much resistance as far as looking at the chart. There was this liquidity void here, but it got filled here on the way down. So we could go up here into this liquidity void here. The whole point of this, if it's going to be a prolonged bear market and go back down, the whole point of this is going to be to try to get that $45 billion in stablecoin people back in, make them think that the bull market's still going. That's if it's going to continue and do all of this. It's quite possible that it could be that was the bottom and this is the bull market, and we go like this, and then we go up, and happily ever after, everybody gets Lambos, and we go to $1 million a coin, like some people say, and everybody gets Lambos. Usually the market, people that don't know the market very well, usually the market is designed to frustrate as many people as possible. So taking off from here with the big banks, big institutions like BlackRock and stuff not in, their wealth clients not in, they all applied to buy Bitcoin. They haven't bought any significant amount. So for those guys, the big guys that control, trillions of dollars that can move Bitcoin wherever they want, for them to not be in and this thing take off to where it's 300,000, where they're going to get one coin instead of, whatever, at 20,000, 60 coins, six coins. Can't do math right now. But they're not going to do that. They're going to want to bring it down to 20 and get their, more money for their buck. And so that's my theory, is that this is not going to be happily ever after Lambos for everybody. Instead, we're going to do something similar to come up here, try to get the money back in, and then go back down to either one of the liquidity voids or just below to all-time high and do the real Wyckoff accumulation there. That's what happened in this mid-cycle. So it's quite possible we're mid-cycle and we haven't seen the cycle top, but this isn't going to be straight up from here. That's my opinion. So Thanks for watching. Have a great day, guys. Thank you.